you don't notice it happening. There's no clear moment where you consciously decide this is how you'll behave with money. No announcement, no rule you write down. It just slowly becomes normal. You hear someone say they invested $10,000 in a stock. You nod. It barely registers as strange. It sounds responsible, mature, like something you're supposed to do. Maybe you've done the same thing yourself. You move money into the market even if you don't fully understand what you bought. You tell yourself it'll work out over time. That's what everyone says. And importantly, that's what everyone believes. Then, on another day, you see a book, a course, or some kind of learning opportunity that costs $100. Your reaction is completely different. You pause. You stare at the price. You feel a subtle tension in your chest. You wonder if it's really worth it. You remind yourself there's free information everywhere. You tell yourself you'll come back to it later, after you think about it, after you're more certain, after you feel more confident it won't be a waste. What's strange is that the money itself clearly isn't the problem. You already proved that. You were willing to risk far more on something you barely control. Yet when it comes to spending a relatively small amount on understanding, clarity, or personal growth, your mind suddenly becomes cautious, almost defensive. This behavior is incredibly common, and that has nothing to do with being cheap, lazy, or uninterested in learning. It's psychological. The human mind doesn't evaluate all dollars equally. It categorizes them. Some spending feels like a real investment. Other spending feels optional, indulgent, or risky. One feels mature, the other feels uncertain. And most people never stop to question why. The deeper issue isn't intelligence. Many people who behave this way are thoughtful, hardworking, and genuinely trying to make good decisions. The issue is where responsibility feels like it lives. When you put money into stocks, funds, or assets, the responsibility feels distributed. If things go wrong, it's the market, the economy, bad timing, external forces. There's emotional distance between you and the outcome. But when you put money into knowledge, the responsibility collapses inward. If it doesn't work, there's no market to blame, no headline, no external excuse. It feels like a judgment on you, on your ability to choose wisely, on your competence. And the mind is deeply uncomfortable with situations where failure feels personal rather than shared. That's why hesitation shows up. Education removes emotional cover. It forces ownership. It quietly asks you to acknowledge that maybe your current understanding isn't complete. And even though that's objectively true for everyone, the ego experiences it as a threat. This is also where many people misunderstand themselves. We're taught that money decisions are logical, that good financial outcomes come from intelligence and discipline. But in reality, most money behavior is driven by emotion, identity, and fear. The stories you tell yourself about safety and self-worth shape your actions far more than spreadsheets ever will. Buying stocks is socially validated. Everyone agrees it's a smart thing to do. There are ads, apps, headlines, influencers, and conversations constantly reinforcing it. Even people who don't understand investing still feel like it's respectable. Buying knowledge is quieter. There's no crowd cheering you on, no immediate signal that you're doing the right thing. And because it's quiet, it feels risky, even when the dollar amount is small. Underneath this is a deep human tendency to trust systems more than ourselves. Markets feel objective, numbers feel solid, charts look authoritative. Knowledge feels abstract because it lives inside you. Trusting yourself to learn, interpret, and apply information feels more uncertain than trusting an external system to grow your money. There's also an emotional double standard around loss. Losing money in the market feels normal, almost expected. People talk about it casually, sometimes even proudly. But spending money on education that doesn't immediately pay off feels like waste, like a mistake. The same dollar carries a completely different emotional weight depending on where it goes. Identity plays a role too. Many people unconsciously associate learning with being behind. Paying for education feels like admitting you should already know this. Investing, on the other hand, feels like proof that you're ahead, that you're doing well, that you're competent, even if the understanding underneath is shallow. Then there's passivity. People love the idea of money working on its own. Stocks promise growth without personal change. Knowledge doesn't. Knowledge demands effort, attention, reflection, sometimes discomfort. It asks you to think differently, act differently, and occasionally confront things you'd rather avoid. And the human brain is wired to resist change, even beneficial change. From early life, we're conditioned to believe education is something you finish, school first, life later. So paying for learning as an adult feels unnatural, like you missed something and are now paying a penalty. Investing doesn't carry that emotional baggage. It's framed as something adults do forever. All of this creates a quiet imbalance. Money flows easily into things that feel familiar, socially approved, and externally validated. It resists flowing into things that demand internal growth. The paradox isn't really about money at all. It's about where responsibility lives. Assets spread responsibility outward. Knowledge concentrates it inward. Now, this is the part where skepticism usually kicks in. This isn't about saying don't invest, and it's not an argument for buying random courses or throwing money at information. A lot of education is low quality. Some of it is overpriced. Some of it genuinely isn't worth your attention. That instinct to be cautious didn't come from nowhere. The problem isn't caution, it's the asymmetry. You question knowledge intensely while giving assets a free pass. The real shift happens when you stop treating education as an expense that needs to justify itself immediately and start seeing it as leverage. Assets amplify what you already understand. They don't replace understanding. Without clarity, investing becomes hope dressed up as strategy. Knowledge compounds quietly by improving how you think, how you judge situations, and how you respond under pressure. Its returns don't show up in one place, but they influence everything. Another important shift is letting go of the idea that learning must pay off in a clean, measurable way. Knowledge doesn't work like that. Its value shows up as better decisions, fewer regrets, and more options. It reduces confusion. It lowers emotional reactivity. Those benefits are invisible, but powerful. Discomfort is often misread. When spending on knowledge feels tense, it's usually because it challenges your identity. That tension isn't a sign you're making a mistake. It's a sign you're stretching beyond who you've been. Avoiding that feeling keeps you stable, but static. Moving through it builds internal confidence. One useful reframe is to stop thinking of learning as an investment and start thinking of it as maintenance. You don't expect your phone bill to generate returns. You pay it to stay connected. Learning works the same way. It keeps your thinking sharp. It prevents mental decay. When you remove the pressure for performance, curiosity replaces fear. Real confidence doesn't come from account balances. It comes from knowing you can figure things out. Markets change, jobs disappear, systems fail. The ability to learn, adapt, and understand outlasts all of it. That ability isn't something you buy once, it's something you strengthen. When you prioritize judgment over validation, your financial behavior changes. You stop chasing trends. You stop copying others blindly. Decisions feel calmer and cleaner, not because you know everything, but because you trust yourself to learn what you don't. The paradox exists because money feels safer than self-trust, but money without self-trust is fragile. Knowledge isn't about becoming smarter than others, it's about becoming less confused by yourself. And when that happens, spending on knowledge stops feeling risky, it starts feeling normal. And that quiet shift changes far more than any single investment ever could.